Hi everyone. Welcome to Level Up Dividends channel. Many metrics could help investors choose the right stock to buy. One of the metrics I watch closely is the Dividend Growth Streak. That shows the number of years the stock not only maintained but more specifically increased its dividends. The longer this record is, the safer and better the future payments would be. In today's video, I present a list of 6 high-quality dividend stocks that have a stunning record of 50 years and more of dividend increases. Now, let's get into the list. Stock 1, Kimberly Clark. From a small paper mill established in central Wisconsin in 1872, Kimberly Clark has developed into one of the most renowned tissue and hygiene product producers worldwide. The company's goods are being used every day by an estimated 25% of the world's population. Huggies, Kleenex, Cottonelle, Scott, and Kotex are $5 billion brands that are used to market Kimberly Clark's goods. The main customers for the products are supermarkets, mass merchandisers, drugstores, and other retail establishments. Dividend yield, 3.28%. Dividend safety, 88. Dividend growth, 4% per year in the last 5 years. Dividend growth streak, 50 years. According to analysts, the stock has already reached its price target. It is likely better for the stock price to correct to get it at a good bargain. Stock 2, PepsiCo. With approximately $70 billion in yearly revenue, split almost equally between snacks and beverages, PepsiCo is currently the market leader in its categories. The business boasts a robust portfolio of products, more than 20 of which bring in over $1 billion in annual sales. Even while American consumer trends are changing toward healthier options, it's possible that 10 years from now, more people will be drinking Pepsi products globally as the middle-class population grows, bringing with it a greater taste for salt and sugar. The A+ credit grade of the corporation gives it extra financial flexibility to adjust as necessary while also upholding its promise to the dividend. Pepsi will probably continue expanding its range of healthier options to appeal to consumers around the world. Since 1971, Pepsi has increased its payout each year, and it now appears that this trend will continue for some time. Dividend yield, 2.61%. Dividend safety, 93. Dividend growth, 7% per year in the last 5 years. Dividend growth streak, 58 years. According to analysts, the stock has already reached its price target. It is likely better for the stock price to correct to get it at a good bargain. Stock 3, Leggett Platt. The majority of Leggett Platt's remaining revenue comes from the automotive, flooring, and furniture end industries, accounting for about half of the company's total revenue. The company's performance is driven by consumer spending. Leggett Platt has given greater dividends every year since 1972 while working in cyclical markets. This successful track record is a result of the business's dedication to dominating markets with steady cash flow. The markets that Leggett Platt participates in typically move slowly. While the methods and components used to make some products change over time, such as foam mattresses, the issues that mattresses and furniture solve remain constant. Dividend yield, 5.45%. Dividend safety, 70. Dividend growth, 4% per year in the last 5 years. Dividend growth streak, 56 years. The company is trading near to its 52-week low, which means that the stock has room to soar. Stock 4, AbbVie. Humira, an anti-inflammatory medication used to treat illnesses like Crohn's disease, psoriasis, and arthritis, has historically been the secret to AbbVie's success. As it received regulatory permission to treat more diseases, Humira's sales soared from less than $8 billion in 2011 to approximately $20 billion in 2018, becoming the best-selling medication in the world for years. AbbVie made significant investments to increase its therapeutic pipeline in order to lessen its reliance on a single source of sales and revenue. It completed a number of major acquisitions, including a plan in 2019 to pay more than $80 billion to acquire the diverse pharmaceutical giant Allergan. Dividend yield, 4.03%. Dividend safety, 70. Dividend growth, 17% per year in the last 5 years. Dividend growth streak, 51 years. According to analysts, the stock could reach $164, which represents a 12% upside potential. Stock 5, Johnson & Johnson. Johnson & Johnson has increased its dividend every year since 1963 while navigating the complicated world of prescription medications thanks to a broad mix of cash streams and a conservative management approach. Overall, Johnson & Johnson's size, range of products, resilient cash flow during downturns, flawless AAA credit rating, record of innovation, and geographic diversification appear set to keep the company relevant for decades to come. Dividend yield, 2.96%. Dividend safety, 99. Dividend growth, 6% per year in the last 5 years. Dividend growth streak, 60 years. According to analysts, the stock could reach $179, which represents a 12% upside potential. Stock 6, National Fuel Gas. By signing into fixed fee, take or pay contracts with its clients, NFG actively combats price volatility in its midstream sector, helping to stabilize profitability over time. Additionally, over a third of NFG's pipeline transportation capacity and the majority of its gas gathering operations are accounted for by its utilities and upstream gas production. It is especially useful for gas gathering, which can be more sensitive to fluctuations in drilling levels, to have built-in demand. Dividend yield, 3.48%. Dividend safety, 95. Dividend growth, 3% per year in the last 5 years. Dividend growth streak, 52 years. According to analysts, the stock could reach $179, which represents a 12% upside potential. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.